Folks, we are going to talk about insurance. If you are in the real estate game, frankly, even auto insurance is up. Part of CPI is insurance. We're going to talk about from the small and mighty to the folks that maybe have a decent portfolio. We are seeing cancellations left, right, and center in California. We are seeing insurers leave California. It is a complete mess out here. I'm not sure what you're seeing on the other coast, but yeah, let's talk insurance with Coach Carson. How you doing, man?
Yeah, doing well. This is one of those topics I used to take for granted, Michael. Like you just like, oh well, it's on your checklist. You buy a property, you get insurance, knock it off, right? It wasn't a big deal, at least in my mind. As I've grown as an investor, been in it for 2 decades, I've learned that not only is it a big deal, but most of us don't understand what we even have. We don't really understand the market. I know I'm still have a lot to learn myself, but it's just been on my mind lately because partly because the rates have gone up so much. So anytime expenses go up by 20% in a year or two, I start thinking about like, all right, what's going on here? Do I have the right coverage? Do I have the right broker? But also just trying to understand like the basics of like what do we have? Like what kind of insurance should we have? And almost like the first principles kind of conversation, like what Elon Musk does with rockets or
Mhm.
Einstein did with physics. Like let's go to some first principles here. Like what are we actually looking for? A couple thoughts. Feel free to chime in as well. But for those who are brand new to real estate investing, just understanding that what we have as a landlord insurance is a different type of product than a homeowner's insurance product. It's similar, right? But you can't just get a regular homeowner's insurance policy as a landlord. The way I think about it, I know there's a kind of sub insurances out there, but we get extreme insurance for extreme cases where fire or something happens to the property and you just lose the property. You got to replace it. That's like a given, right? That's one part of it. But then as a landlord, you also got to think about, like, I had a property that had a fire, and I've only had a few in 21 years, but you lose rent during that entire time. And so if you have a mortgage on the property, or if you're living off the income from that property, having a rent replacement component of your landlord insurance policy was really important. Like I actually got a check for like $30,000 on that one property saying, here's the rent that you're going to be missing for this period of time. And you can use that to pay the bills. You can do that. So not only replacement cost, rent replacement insurance. And then there's this whole world of liability insurance, which is basically a whole nother topic, but really important if you have a lawsuit, if you have a slip and fall, if you have, knock on wood, haven't had to use that before, but it's part of, your concern. If you start getting more assets, can someone sue you? Can someone, frivolous or not, like speaking of California, there's things that people can do things, whether they have some justification or not. And so having a liability component to your policy, and maybe even what's called an umbrella policy, which is if you like, let's say you have $500,000 worth of liability and coverage on your regular policy, maybe getting something called an umbrella or an excess liability policy that covers from $500,001 up to $3 million, $4 million. I mean, you could pick some numbers. That's sort of in my mind, Michael, what I've been thinking about, like three different components: the replacement of the property, the income, and the liability. You have any other things that you would add to that?
No, I think that's what I recommend everyone kind of think about in the beginning when you're onesie, twosie, threesie, kind of units. You can still go to a farmer's or a state farm. Certainly, if you're doing single family homes, you got to get the landlord policy. I recommend strongly an umbrella policy, even if you just have one rental unit, because you want to have that expansion. It's funny, the umbrella policy, when it's used, or if it's ever used, is typically not for the house, but it's shocking if you go back and study history. It's actually usually when you're driving your car,
Yeah.
right? Um,
Which was also, this is an important point. Like I actually interviewed an attorney recently. We were having this conversation, and you need an umbrella policy for your properties themselves, because if somebody sues you for more than what the policy's coverage on the property. But what you're talking about is probably a riskier bet, is you personally need an umbrella policy. So
correct.
those are two different things. You have the rental commercial liability policy, and then you have a personal umbrella. And that's another point to make. You're probably going to get two different umbrellas.
Yeah, absolutely. And again, umbrella policies, they're going to be for millions of dollars. It started at one, then went to three, now five, then 10. As your assets grow, you want to make sure the umbrella policy is there, to cover just in case stuff. But they're relatively cheap,
Yes.
because they don't go into effect until the primary insurance is done. But let's talk about what's going on in California. So I've had California real estate for more than 20 years. Like you said, it was a checkbox for 18 years. It was literally, I could guess the principal within $20 because I'd done it enough. Then starting probably in 2022, we started to see some rent bumps, or not rent bumps, sorry, inflation come into my quotes. Then 2023 came and we started seeing cancellations, right? I had never had a cancellation. I didn't even know insurance companies could cancel, right? I got a lot of policies. My policies, my houses are at one firm and my commercials at another. I've never missed a payment. They've always taken care of me, never been a problem, yada, yada, yada. I didn't know. And now they're canceling onesie twosies. They're looking for reasons to cancel. I had somebody fly a drone over my units and go, hey, there's leaves on the roof. We're going to cancel your policy. I'm like, really? This is what we're doing now? They want out, which is really a problem. And in California, there's something called California Fair Plan, which is kind of a insurance of last resort. Like if your policy gets canceled and you can't get it anywhere else, you go to California Fair. That's only for fire. That's only for, it's not for liability. So you got to get liability on top of that. And then you got to get, rent replacement on top of that. It's ridiculously expensive.
Yeah.
I'll give you a real life example. I had a fourplex that the old insurance was about 1,600. My policy was canceled. I couldn't find any other insurance. I shopped around for 30 days. My new insurance is 4,200.
Hmm.
16 to 4,200. Wild.
Yes. Yeah. I mean, that's why I said it used to be a checkbox item. It's not a matter of if you can get it, you're looking at 3 to 4 times in some cases, and especially in California. I know I have a lot of people, students in Florida as well, where hurricanes have been an issue. The coast of South Carolina. So yeah, if you're in a disaster prone area, then the trend has been cancellations. Insurance companies been trying to save money. Now these things go cyclically, by the way. I mean, we're in a capitalist economy. At some point, somebody wants to make some money, and there's going to be some insurance company who's like, "Hey, nobody's doing any coverage there.
Yeah.
I'll go in there. I'll make." So at some point, there's a price where these things stabilize. But there's a lot of stuff. This is where I don't understand all that. There's a lot of stuff going on behind the scenes. There's regulation. There's state by state regulation issues. There's just things that are priced into insurance that are difficult to understand. So I guess the solution to the story to me, I don't know what you think about it, is you really got to shop and you really got to talk to people who are in the industry to understand who the players, what are they looking for? Is there some metric maybe that makes a difference to them? For example, I'm not saying this is always the case, but if you get higher deductibles, or if you can demonstrate that you have a maintenance plan, if you can demonstrate that you have a really strong screening plan for tenants, like I think insurance companies, they're risk averse. So if you could show them that you're also a risk averse investor who's thinking about those kind of things, is not trying to get a bunch of ticky tacky little claims, then I think you have to almost sell yourself. You got to pitch yourself like you would a loan almost to insurance brokers, or at least I think that's the way I'm thinking about it, is put yourself out there as a good client.
Yeah. What I would tell someone, I've gotten literally in the last 90 days, 6 cancellations across our portfolio. So obviously my first rule of thumb is I got to go take care of those, because typically speaking, you've got about 90 days from notice to cancellation. So those 6 properties are top of mind right now. But what I should be doing going forward is going back and having our entire portfolio evaluated, right? We've been with the same brokers for a while. Their service is okay. But to your point, I've been kind of lazy, right? It's always come in at about what I wanted. And anytime I had a problem, they took care of it. But now it's time to go shopping. And you're right. It's time to go look at, all right, let's take the deductible from 5K to 10K, shoot, 20K for our commercial properties, right? We don't file claims unless there's a big loss, right? We've had 3 claims in 20 years for fire. We don't do ticky tack stuff. But yeah, I think it's time to shop. What I would tell somebody watching this, even if you're good, I would take your experience from Coach and I and just meet an insurance broker. I think that's the first thing. A lot of folks, when they get started, they just go to their normal Farmers or State Farm or Allstate agent, which is great, right? They got your car, they got your home, they got your investment property. But I would seek out an insurance broker, because they can take your portfolio and shop it around. It's like a mortgage broker, right? You can go to your bank and get a loan, but you're probably not going to get the best rate and the best terms. If you go to a broker who can shop your file, It's going to give you a lot more options. I just don't think we've had to do that for a while. And now it's time to prepare and shop just like you would a mortgage.
Yep, agree. And I think as part of your growing up as an investor, we mentioned like 2 to 3 properties. I think the State Farms of the world. I used to use Nationwide, and I would get a policy through them. They're great, right? They probably
Yeah.
they were actually cheaper than what I'm getting now. But at some point, just like with mortgages, you have to grow up into the commercial mortgage world. There's this whole market, this secondary market of insurance and then reinsurance. And if you want to give yourself the best chance to find a product, somebody to give you an insurance product, you want to shop around. Like you want to see the highest selection. And so I have found brokers typically have that access. They can shop at dozens of different companies. For example, I'm in the student rental market, and that's a very niche product. And if they talk to 9 out of 10 insurance companies, they're like, no, we don't insure students. That's not what we do. So then you have to go to another one. So you got to find somebody who understands that market, that product, who can shop it around. And then what I say, and this is where I'm in the process of just learning, I'm asking questions. I'm not taking like, if they just, it used to be just like, okay, just check it off the list. They told me that's what it is. That's what it is. I'm asking questions saying, all right, why is that the case? Is there anything I can do to change what I'm doing to make this a better, to me, a better risk for this insurer? That's where the non-lazy approach to insurance goes. And it also just goes into thinking about like the first principles of why we get insurance. To your point about deductibles, I find a lot of people they think about insurance like from a medical insurance standpoint, which is really not a true insurance. Like medical insurance pays for everything. Whereas what insurance is really for is catastrophic losses. It's for the things that you can't cover on a daily basis. So what we should be like, as you get more cash, as you get bigger reserves, as you're wealthier and you have more wealth to kind of cover your own risk, you should essentially be self-insuring a portion of your portfolio. You should become your own insurance company for 5%, 10%. I know some investors who have zero debt on properties, and they choose, and they're in Florida, coastal areas. The insurance gets so ridiculous in some of those areas and their lot is worth so much, and the property compared to the value of the lot is worth so little, that eventually they have self-insured a few properties. And I'm not saying that's like, don't take that as advice like for what you should do.
Yeah. If you have a loan, that's not a good idea.
No, these are growing
Free
up
and clear.
Free and clear, and not on every single property. But like what I'm saying here, that this is the first principle. So many people are just knee-jerk response saying, "Oh God, you got to do this insurance, you got to do this," and you're not thinking about like from the insurance company's perspective. You're not thinking about it from the cost perspective, return on investment perspective. And when you do that, you start asking more questions and thinking about it like an investor, and then you make the right decision based on that.
Yeah, I couldn't agree more. Again, folks, insurance is something you're going to deal with if you're in the game. It's frankly something you should have, even if you just have a home and you drive, right? Driving is the most risky thing we do every day. But yeah, you've got to definitely pay attention. It's not a checkbox. Shop around, ask questions, play with the deductible. There are ways that you can see some significant savings. Any closing thoughts, Coach?
I think just encourage everybody to work on it. Put this on your to-do list. This is one of those, nobody likes doing this. Like who likes reading an insurance policy? The only other thing I'll add is that something else I'm doing in addition to shopping is this is some just kind of a personal advantage I have. I have a brother. My brother's an attorney who sues people like us. Like his job, he's one of the people who clients hire him when they slip and fall at a property or in a car. So he's on the other side, but it's really helpful because and this is something I think we could all, if you're looking at, if you have assets and you're trying to kind of pressure test your assets and think about like where your risk is, and having an attorney look at your policy, because they actually are used to reading policies and they understand all the jargon that's in there and what's really in there. Paying an attorney, just like you do to review a contract, paying an attorney like that to review your insurance policies, I think is a really good thought, because here we are talking about millions of dollars, potential risk. Do you really know what's in your insurance policy? He's read a couple of my policies. He was like, well, what about there's this one thing they exclude that would probably be, something you would need to insure. And so we would go back and talk to the insurance company. And so that's the kind of thing that you just might want to think about every once in a while. It's not like an every year kind of thing, but having an attorney who understands insurance, review your policies, translate it for you, tell you, yeah, you're okay. No, you're not okay. I even asked them some anecdotal stuff. I was like, hey, ask all your insurance buddies, like, had they, in the last 30, 40 years, they've been suing people, what's the biggest lawsuit they've heard about in the upstate of South Carolina or in Georgia? And this was kind of how we decided how much liability insurance we should cover, because getting into that $3, $4, $5 million range would be extremely rare
Mm,
lawsuit. Not to say it's never going to happen, but there's a
right.
reason. There's a reason that extra million or that extra 2 million is super cheap, is because insurance companies have tables and they know how rare it is. So that's
Yeah.
the kind of thing we start thinking about, like what risk actually is, how big the risks are, or are you willing to pay for that? Are you not? That's the kind of first principles thinking that I'm trying to do a little bit better on with insurance.
I love it. Coach, you're amazing. Thank you for bringing us this topic. Where can people find you?
You can find me if you're on YouTube or a podcast. I have a podcast episode every Monday. So just search for Coach Carson on YouTube or on your favorite podcast player. Connect with me there. Leave me a comment. I would love to hear from you.
Thank you, buddy. Take care.
Thanks, Michael.